So, Craig, I want to understand. Look, if Elon Musk wasn't in charge of both these companies, this merger doesn't happen, right? I mean, let's be clear about this.
Oh, that's absolutely the case. There's the industrial logic for the merger, which they're suggesting now has to do with data centers in space and that sort of thing, is pretty thin, to be honest. This is really good news, I suppose, for XAI, but you're dragging SpaceX into this. And it's simply not a terribly compelling idea from the SpaceX side.
So then, I guess the question is, then why? I mean, is this Elon? I mean, this is capital, really. I mean, XAI needs capital. We know that SpaceX has a handle on that capital. I mean, that seems to be the only reason then to do this.
That's the only reason. Look, I mean, SpaceX is has turned free cash flow positive from what they say. I mean, I want to caveat that by saying we haven't seen financials for the company yet. So we're just going based on relatively thin reportage. But the company's supposedly doing $1 to $2 billion of positive free cash flow a year. And now they're merging it with an XAI that's burning through $1 billion a month. So it's a rather sort of obvious capital play to benefit XAI. But again, it's not exactly clear what the benefit is to SpaceX.
Right. Now, in terms of valuation, and I say valuation because when we think of multiples, I mean, what is a multiple in an IPO like this for a company like this? It's sort of, it's not necessarily rooted in fundamentals. But when it comes to valuation, what impact do you think this merger has on valuation?
It doesn't help. I think at the end of the day, there's probably still a lot of appetite for anything that is SpaceX related, and the Musk name still carries real value. But for the investors that we speak to that were involved in SpaceX already, there's a lot of grumbling about this is not really what they wanted. The bulk of the asset is still SpaceX, to be clear, and so this is not a showstopper type of decision. It's just it's a frustrating one, I think, for a lot of the investors that we've spoken with.
And so if we focus on the SpaceX side of this business, we had the news earlier this week that they have submitted their application. They want to put 1 million satellites in outer space. They've submitted the application with the FCC. We've talked on the show about how I think there's only something like 25,000 satellites in space right now, and so this would obviously be multiples more than that. When you see that, what's your reaction?
So first I would say, look, remember the core businesses of SpaceX up to now have been the Starlink business for broadband access. That's how I originally started to get involved in analyzing the company, was because of my coverage of the broadband business in the U.S. and then ultimately globally, and then the rocket launch business. Um, it- First, and I would say the coverage of the data centers in space is provided by my colleague Nick Del Deo, who published a report this morning with Chris Che and Julie Shu, where they just kind of, I wouldn't say poured cold water on the idea, because I want to be clear, they're not dismissing the idea of data centers in space. But I think there's a lot of very superficial analysis of data centers in space. They published a rather in-depth report about it 2 weeks ago or something like that, and then a report this morning in response to yesterday's FCC news. And they just a little bit of reality checking here. If you're talking about, based on the expected weight of these satellites, maybe being able to do 60 of them per payload of a Starship rocket. So in order to, and so if you were to get up to 1 million satellites in orbit, and remember, these things have a 5-year useful life, which means you're deorbiting 200,000 satellites a year. They're coming back into the atmosphere and burning up essentially, or being deorbited and taken out of useful life. So you have to replace them with 200,000 satellites a year. 60 satellites per payload, and 200,000 a year means you have to be launching 9 rockets per day in order to sustain the constellation even after it's built. That's just a staggering number, right? If you think about the reuse statistics for the Starship rocket, and we've only gotten one booster stage so far that's ever been reused successfully. You'd have to get to both being reused. But if you assume that they last for 100 launches each, which is the hoped for reusability rate, you're still talking about 30 new Starship rockets as launch vehicles every year, and again, 9 launches a day. So it sort of puts in perspective. This is really, really difficult, and I would argue improbable. The idea that space-based data centers are fundamentally cheaper is probably not actually correct. My colleague Nick Del Deo's work suggests that while the cost structure is quite different, there's obviously a lot more cost in the rocket launching process and getting them into space, less on cooling. Although, by the way, just the fact that it's cold in space does not mean that you don't have to cool the chips. That's a common misnomer. But the cost structure is different, but not actually all that much cheaper. The costs actually turn out to be, based on the work that he's done on CoreWeave, to be pretty similar.
So, Craig, last question for you. You cover the space sector at large. I mean, do you see this ushering in a broader wave of space IPOs that follow SpaceX?
Yes, I think that much is clear. Not necessarily because of the data centers in space opportunity, but the opportunity for space in general is real, right? There's no mistaking that Starlink as a business has a real place in the broadband ecosystem, especially in parts of the developing world where there simply isn't the wired infrastructure to provide satellite communication. There are going to be competitors to Starlink, right? I mean, Amazon Leo is the one coming from here, but for geopolitical reasons, you're going to have them around the world, especially coming out of China. Uh, the rocket launch business is a real business. You've got all kinds of security businesses and military businesses and drone management systems and all those kinds of things that are being launched. And absolutely, there will be real businesses in this sector that are going to be launched over the coming years, and you're going to hopefully see some IPOs of those businesses.
And who are the names that you're watching? I mean, just give us a couple names that you're watching closely.
Well, right now, I think the space is utterly dominated by SpaceX,
Right.
and if you're a satellite company, they're sucking all the air out of the room, and clearly, if you do see an IPO from SpaceX this year, the amount of capital that you're talking about, people are saying a $50 billion IPO, is an extraordinary number. That's just the amount of the IPO, not the valuation, obviously. So that's an extraordinary number. So I don't think you're going to be seeing IPOs right around the corner yet. I think you'll probably see them be a little bit further down the road.
Great. Well, Craig, I want to thank you for coming on. That is Craig Moffett from MoffettNathanson here on TITV.